A 90-year-old mutual fund giant that manages $1.9 trillion just launched a crypto fund, not a simple Bitcoin fund. A fund where human portfolio managers actively trade a rotating basket of coins for you. The real question is whether that is worth paying for. This is TKNZ, the T. Rowe Price Active Crypto ETF. It started trading on the New York Stock Exchange on July 16, 2026. And it claims a genuine first. It is the first actively managed multi-token spot crypto ETF on the American market. Here is how it works. Instead of tracking an index, TKNZ holds between 5 and 15 tokens chosen from a shortlist of 15. A team of portfolio managers rotates between them based on fundamentals, valuation, and momentum. At launch, that means Bitcoin, Ethereum, BNB, Solana, XRP, Hyperliquid, Dogecoin, and even a slice of the USDC stablecoin. The hook here is the name on the door. T. Rowe Price is not a crypto startup. It is a mainstream, 90-year-old asset manager that pensions and retirement accounts already trust. Putting that brand on an actively traded crypto basket is a real Wall Street first, and that is why it is getting so much attention. But now look closer, because there are two things the marketing glides right past. First, the fee. TKNZ charges 0.75% today, but only because of a temporary waiver. After May 2027, that fee rises to 0.90%. A plain spot Bitcoin ETF charges you closer to 0.15, so you could be paying up to 6 times more to own this fund. And what exactly are you paying for? At launch, roughly 40% of the fund is just Bitcoin, and another 18% is Ethereum. So nearly 60% of this actively managed product is the same two coins you could buy far more cheaply almost anywhere else. You are paying an active fee, but most of the portfolio is simply the obvious core. This is the oldest question in investing, now wearing a crypto costume. Active management only pays off if the manager consistently beats the cheap version. Decades of data show most active managers fail to beat their benchmark in ordinary stocks. Crypto is even harder to predict. So the whole pitch rests on a bet that this team can time rotations almost no one times well. One more thing. The ticker, TKNZ, sounds like tokenization, the trendy idea of putting real-world assets like bonds and property onto a blockchain. This fund does none of that. It is a basket of existing liquid cryptocurrencies. The ticker is doing marketing work that the fund itself does not actually back up. As for performance, there is nothing to show yet. This fund is only days old. There is no track record and no proof the active strategy works. You would not be buying results. You would be buying a brand and a promise. So who is this actually for? Someone who wants diversified crypto exposure inside a normal brokerage account, trusts the T. Rowe Price name, and will pay a premium for a manager to make the calls. Just be honest that that is what you are buying. So tell me in the comments, would you pay 0.9% for actively managed crypto, or just buy Bitcoin and Ethereum yourself? I want to hear it. And if this breakdown helped, hit like and subscribe for more ETF deep dives, ticker by ticker.